Hi guys, and welcome back to Cash Bright, your guide to investing in an ever-increasingly uncertain financial world. So, I have come up with 3 stocks which I believe are great stocks for you to buy. You know, the stock market has recovered far better than anyone expected it would, and in many respects, far better than it should have. But the fact remains that the market has given us all a great opportunity to make some serious money, and I believe there still exists a lot of potential growth for investors to capitalise on, if you know where to look. Of course, there are no guarantees when it comes to the stock market, but if you want to be in it to win it, here are my top 3 stocks to invest in right now. Number 1. T-Mobile US. The American wireless network operator has been doing rather well since the start of 2020. Its second quarter results have been particularly good, as the company announced that it had acquired 1.1 million new postpaid subscribers to its network and is now said to have stolen AT&T's mantle as the second largest wireless provider in the US. The company's performance has been helped by finalising its acquisition of Sprint in April and successfully merging the two companies' networks and commercial operations. To me, the company is looking in better shape than its closest rival AT&T and will soon be knocking on the door of Verizon, the US's top wireless network provider. As a result of this, the prospects of this stock are good, and the company is likely to build on these short-term wins as we head into 2021. The stock has a rather stable beta score of 0.3 and an EPS of $2.80 for the trailing 12 months. The stock's price to earning ratio is $41.16, which is not the best, but also not the worst compared to other growth stocks. I think overall it's a good stock to buy in my book, and one that will hopefully continue to trend upward as it has done for the past 4 to 5 years. Coming in at number 2 on my list is Intel. Now, Intel has not had the best of times recently. The company reluctantly announced that the launch of their latest series of computer chips will be delayed by 12 months. This news comes after its previous generation of chips were also launched behind schedule. And it's fair to say that investors were not impressed, as Intel stock fell from around $64 in early June to $48 in early August. Many analysts blame the company's failure to keep up with competitors such as AMD, who have been aggressively gobbling up market share in the computer chip sector. Now, Intel makes its own chips, but this cost-cutting approach has clearly caused more problems than solutions, and its rival AMD has steamed ahead by producing their processors through third-party manufacturers such as TSMC. The company would probably admit that there has been too much vertical integration going on here, and this has led to the current delays to its latest generation of processors. But this all presents a great buying opportunity. The company is still the world-renowned Goliath of computer processors, and there's a strong likelihood of the company's fortunes improving in the medium to long-term future. The stock's EPS is currently at $5.44, and its price to earnings ratio is an attractive $8.82. I believe at its current price, this stock is undervalued, and this dip represents a great time to buy. Finally, my third stock of choice is Lockheed Martin. I believe the American aerospace and defense company stock is a great one to buy right now. The stock price rebounded after the March crash and currently trades at around $385 a share. Even despite the logistical supply side obstacles presented by global lockdown, the company announced a 14% growth in earnings in its second quarter financial results. The company also received $22 billion in new orders and has an order backlog of around $7 billion. There is also an attractive annualized dividend of $9.60, representing an increase of around 7% on the previous year. Whilst I personally wouldn't buy this stock for the short term, as a long-term investment, I think it's a winner. The stock's EPS is currently at $22.82, and its price to earnings ratio is just $16.90. I therefore think that there is more value than the current market price reflects, and this is why I have it as a stock to buy. Do you think there are any better stocks to be investing in? Let us know in the comments below, and as always, good hunting to all you investors out there. Thanks for watching. If you found this video to be helpful, please leave a like, and don't forget to hit the subscribe button. And until the next time, stay sharp, stay hungry, and stay cash bright.